And so for 2 years, the country that has dominated the headlines of Europe's debt crisis, and for the next 2 weeks, it's going to be the center of investors' attentions. By Thursday, they need to decide if they're going to trade in their Greek bonds. Should that go to plan, Eurozone finance ministers then review the outcome on Friday, and the exchange is set to take place on the Monday, paving the way for Greece to get the funds it needs, of course, to make a €14.5 billion bond repayment due on March 20th or face default. So speaking to Bloomberg, Greek Finance Minister Evangelos Venizelos said the deal was the country's only option.
We have only a plan A, and our target and our commitment and our ambition is to fully implement the plan A.
Well, Greece is being watched very closely by investors all over the world, I suppose. Angie Lau has more on this now from Hong Kong. Angie, we're seeing stocks there declining for a second day. Of course, China has been lowering growth targets. We already knew about that. Stocks here falling for a second day. But what has really been driving trade where you are?
Well, certainly all of that, Miriam. China, 7.5 economic growth goal, but also concerns about Greece and Europe and also in the United States. So all of that really building up into a sell-off today. We saw some profit taking after 11 record weeks of gains here. MSCI Asia Pacific Regional Benchmark Index extending losses as we head to a close here in Asia, down 1.25%, all on concern about the global economy. So we've got China cutting its economic growth target. We have factory orders in the U.S. dropping. Data today, later today, there may show European economy contracted for fourth quarter. So the three top laggards tell the story today about those concerns. The region led lower by raw material producers. Investors worried about demand in a slowing economy. BHP Billiton closed 2.3% lower. We saw AIA shares plunging nearly 8.5% here in Hong Kong after AIG announced it is selling a significant stake at a discount to repay its U.S. bailout loan. And ICBC dropped nearly 4% on reports that Goldman Sachs may sell a big chunk of the company. Goldman Sachs, by the way, lost money in Asia last year for the first time since 2008. So another day of sell-offs in Shanghai as well. Take a look there. The index falling the most in a month, down 1.4%. Concerned that a slowdown in China's economy going to curb demand for developers and building material makers, but that pretty much extended across the region as well.